Hello, everyone, and welcome back to the Markets in Focus bi-weekly webinar. I'm Razan Hilal, Market Analyst with Forex.com. Today is June 29, 2026, and markets are still focusing on the state of the Strait of Hormuz regarding the polls, regarding the safety and the risks that are imposed on key supply that is transiting across this chain with this choke, which is known as a key energy artery for the globe. Now we have crude oil prices priced in a very big chunk of that geopolitical risk unwind, yet we still have a fragile state for the US Iran evolving peace deals, which are also impacting global markets, including the US dollar index that is still widely affected with the inflation reports and expectations for a potential rate hike towards the year end. Now, we also have the non farm payroll for this week, which may also impact FX volatility and primarily the US dollar index, which is looking towards another potential bullish breakout rally. So we have short term implications for a pullback, and the longer term picture is still pointing towards bullish risks that is overall pressuring precious metals, gold, and silver near their critical lows that may open the path for long term. Uh, accumulation opportunities or long-term dip buying opportunities once again, and we have a bit of risk off sentiment across Bitcoin and US indices that also may be temporary before the long run resumes. I think that's it for the 1 minute disclaimer, and we'll start with the usual, which is the US dollar index chart. So over here we have the US dollar index on the monthly time frame, with possibly testing the bounds of a breakout above the neckline of a potential double bottom formation. Should we have a confirmed breakout over here with a sustained close above the 102 mark, we can possibly target the 102.80 and the 104.40 levels on the DXY, aligning with key levels, Fibonacci retracement levels of the overall downtrend spanning between the highs of January 2025 and the lows of 2026, where we can see that these ultimate targets above the 101 mark, which is the 38.2%, align with the 50 and the golden 618 as potential targets for the DXY that may open the way for key resistance levels that may give a breather for the markets to turn around once again, including major currency pairs and precious metals. Now, on the downside, the XY should have a sustainable hold back below that key barrier, which was a multi-year support and resistance to price action, and that is back below the 100.80 mark and the 100.20 mark. If you look at it from a daily time frame perspective, key levels to be watching below the 101 mark would be the 130 level, aligning with the uptrending support connecting consecutive higher lows since May 2026, in line with that previous key area here, which is near the 99.30 key levels that may open the path for the buying opportunities on the DXY. Once again, and should the DXY sustain below these levels and break down below the uptrending support connecting higher lows since January 2026, we may be shifting towards a potential bearish outlook on the DXY. On a long run, would be confirmed below the 95 mark, as that would be a breakdown below the uptrending bullish bias intact since the lows of 2008. For now, we still have bullish bias. Monthly momentum is still pointed to the upside, yet daily momentum is pretty stretched and at overbought levels, paving the way for a corrective or a short term breath for momentum or a correction to recharge before that a long term outlook may resume on the horizon in line with inflation and rate expectations towards year end. Now, we also have a similar scenario on the Euro USD. The euro and the dollar may confirm each other given the strong correlation between these charts. And if you look at the chart of the euro dollar, it is also aligned with a multi year previous resistance turned into a support on the chart, which is above the 1280 to the 113 psychological mark. Sustained hold below that level may also boost further gains on the DXY. In terms of the euro, we may target the 110, lining with the upper bound of a downtrending channel also since 2008, where also would be presented with a critical level that may also be a turnaround and long-term accumulation opportunity on the euro dollar, unless that key level is also broken down to the downside, opening the path for further gains on the DXY and general pressure across major currency pairs, including the Japanese yen, the Canadian dollar, the British pound, and of course precious metals, gold, and silver. Now, if you look at the crude oil chart, I'm going to drop down to the weekly time frame. We can see that there's still more room to go in terms of bearish momentum on the crude oil chart. From a daily time frame perspective, we are at oversold levels last seen in 2025 that are opening the path for a breather for the markets, or a consolidation phase or a rebound phase above the 70 psychological mark or the 69 support on the crude oil chart. Now, in terms of the key levels, I'm refining them using Fibonacci extension tool placed on the wave extending between the highs of 2022, the lows of 2026, and the highs of 2026, where we can see that price action is respecting these levels. The latest rebound at 73.50, which was the golden 618, now is the key barrier between potential revival of bullish bias and bearish bias on the chart. Over here, we're aligned with the variation of the 618 to 681, which is the 68.80 to the 69 mark. Sustained hold below this level may open the path to the critical previous support and resistance to price action respected on the crude oil chart since 2019. And of course, a sustained hold above that will target the next Fibonacci level, which is near the 60 psychological mark, 78, the 61 mark to the 6080 level, which is 78.6 Fibonacci retracement ratio, before making any further assumptions on the crude oil chart. And ultimately, price action is here testing or retracing the target potential of that consolidation and that overall breakout, which is currently taking pause. On the upside, a sustained hold back above that previous low, back above the 72, 80 to the 73 zone, may open the path back to retest the 76, 20 level. Sustained hold above that would likely start building further conviction for bullish bias on the crude oil chart once again. So the key levels that I have in sight over here that may open the path to bullish bias, and that scenario would likely be aligned with re-escalation between the US and Iran as nuclear negotiations proceed within a 60-day framework, and in line with the overall narrative of toll gates that are still informal, that are also still being applied across the Strait of Hormuz. That's for the crude oil chart. The next chart we have in here, which is also very hot in the headlines, which is the gold chart. Dropping down to the daily time frame, we can also see gold tracing a potential bullish divergence from a daily time frame perspective with the price action. From a weekly perspective, we're still pointing to the downside, and from a monthly perspective, of course, there's a long way to go to potentially recharge that exponential surge that occurred on the chart at least since 2024. Dropping back to the daily time frame over here, a sustained hold back below that previous low, or at least back below the 4020, may possibly promote another dip or retest to the 3960 support. And a sustained hold below this level may open the path to retesting the October 2025 low on the gold chart, which is near the 3,880 level, potentially opening a path for long-term accumulation opportunities. If not, we may be targeting a deeper corrective cycle on the gold chart that may go down all the way back to that previous resistance near the 3,460 that capped price action over several months in 2025. And this level is also significant from an all-time perspective on the gold chart, as it aligns with, so if you place the Fibonacci retracement ratio on the gold chart between the all-time low and high for gold, we can see the price action is currently attempting to break down below the first key levels near the 4080 psychological 27.2 Fibonacci retracement ratio, and a sustained hold below that is likely targeting the 38.2% near the 3450 zone, as I previously mentioned on the daily time frame, finding that level between the 3480 to the 3450 level respectively. That level may also open the path for potential long-term accumulation opportunity on the gold chart, once again as it aligns with a very historical retracement level on the gold chart. Now on the upside, should we have or key zones to look for that may also confirm the potential definite reversal for gold back towards its record highs. Key zone over here would be the 4,230, and another zone would be the 4,370 to the 4,400 zone. Now, there are also short-term levels to be watching out for. Short-term key resistance levels here below the bounds of that downtrending resistance, connecting consecutive lower highs since March 2026. We'd be looking at short-term resistance or short-term rally potential for gold given the oversold conditions Above 4,100, we can possibly be targeting 4,120 and 4,180. Next, aligning back with the bounds of that trend line. A sustained hold above that would likely test once again that critical zone near the 4,230 for either another pullback risk or another major test to that previous uh, swing peak near the 4,370, as I previously mentioned, for either another pullback risk or confirming bullish continuation and conviction for the gold chart back towards the 5,000 and record highs, potentially once again taking it level by level given the high volatility risks seen across the markets in line with the geopolitical headlines. That's for the gold chart. These are the key zones that I'll be watching. In terms of the silver chart, apologies. In terms of the silver chart, we also have a similar framework. We also have a downtrending dominance for the silver chart since March 2026, and also should silver have breakdown below the lows of this year, below the 55 mark, we can possibly target the 54 support, 50 psychological zone, and the 45 level, which aligns with the lows of October 2025. So we might have potential scenario of gold dropping to October 2025 lows and silver as well as a major potential support and accumulation opportunity on the chart. And that 45 level on the silver chart also aligns with the all-time golden 618 Fibonacci retracement of silver's all-time chart, or at least between the lows of the 1930s and the highs of 2026, where we can see the alignment with the golden 618 near the 45 mark if we properly uh, align the Fibonacci tool on the chart. So that level, should price action go back down there, we can possibly have long-term accumulation opportunities once again on the silver chart. Also aligning, if I forgot to mention, with that multi-decade previous resistance potentially turning into a support for price action in 2026. Now on the upside, I'm going to go back down to the daily time frame. On the upside, should we have sustained hold back above the 5950 mark and the 60 psychological mark, we can possibly target the next key zone here near the 6170 to 62 zone on the silver chart, which was a previous low for this year for a potential pullback risk. If not, a sustained hold above that might likely build bullish conviction on the near term to potentially target the 6340 and the 65 zone, or the 6520 zone, where you can also either have another potential pullback risk or reach all the way towards 71 mark. The 71 level is the key defining barrier for me between potential long-term bullish continuation and bearish continuation on the silver chart. That will be near the 71 to the 7130 zone, respectively. That's for the silver chart. Next up, we have the Nasdaq chart. So in terms of Nasdaq, we're currently attempting to hold a potential bullish rebound, yet looking at the overall price action below the highs of this year, we're possibly in a consolidation phase and a sustained hold for Nasdaq back above that critical zone here, back above the 29,500 or 29,600. Rounding it up, we may be targeting back to 29,800 for potential resistance. If not, we can be retesting the 30,000 psychological mark, 30,100, and the 30,300 for potential either another pullback risk or bullish breakout that may target another potential 1,000 point rally on the Nasdaq chart, potentially targeting 31,500 to 31,600 zone, respectively. On the downside, the sustained pullback below 28,800 may be targeting the 28,600 and the 28,200 as a critical neckline for the Nasdaq chart for either another dip buying opportunity or extended drawdown risks towards the 27 400 and 26,600, aligning with the previous resistance, connecting 2025 and 2026 peaks for potential long-term accumulation opportunities. For now, we still have bullish strength above the 28,800 mark, and any further dips may also trigger dip buying interest on the Nasdaq chart once again, in line with the overall long-term potential for the tech and AI sector, which is currently also facing headwinds with future valuations in line with potential rate expectations. These are the key charts that I have for today. We're running a bit late on time. The final one will be the Bitcoin chart, which is also still in a relatively bearish position on the chart, below the 60 psychological mark. And a sustained hold below the 58,000 mark would likely extend drawdown risks towards the 56 and the lows of August 2024. So that's near the 51,000 and the 49,000 zone for potential long-term accumulation opportunities. If not, a sustained hold for Bitcoin back above the 62,000 and the 64,000 levels would likely open the path back towards the 67,000 mark, which is the key defining barrier between potential bullish continuation on the Bitcoin chart back towards its records or another pullback risk and consolidation risk on the horizon. Thank you so much for watching. Open to any questions or chart recommendations that you have. And also a quick note, I'm also running a daily mean on market call, also covering these key charts in line with local markets, including the UE, MSCI, and favorite stocks like SALIC. Make sure to register for this webinar in the link following the posting of this webinar on our YouTube Middle East page and LinkedIn page, and we'll meet in the next market call.